All right. Well, hello, traders. This is Roderick. I'm going to give you some quick information. Basically, a trade alert with entry, stop loss, and take profits, and some information on how to pass a funded challenge with 1 to 2 trades and minimum risk. This is basically a trading plan. I'm also going to tell you what's going to nullify it, and some alternatives to take. If you enjoy this information or it helps, do me a favor and hit like, follow, or subscribe, depending upon where you're seeing this at. Um, Now, to get started, let's take a look at what we're going to do. Basically, I'm going to give you a trading plan for the coming week or so. Now, we're going to start off with the top-down analysis that will basically include a overview of what is expected to happen for what is expected to happen this week, where we have multiple news announcements this week. Also, we have a holiday in the middle of the week, so those are things to be careful of, or cautious, or aware of at least. Now, for this coming week, with the top-down analysis, you really want to start with the monthly. What I'm going to quickly do, though, is also take you through. I'm going to do this for NAS 100 because that's what I trade generally. You can do this on any currency or index, but I trade NAS 100 predominantly, occasionally EU, GU, or US 30, but predominantly I trade NAS. I use US 30, the S&P 500, and the dollar index as correlating assets that give you a better idea of what's going on. And if we take a look at those correlating assets here, you see this up here is NAS 100. This is NAS 100. This is US 30. This is the S&P 500, and this is the dollar index. One of the things that you can see by looking at these right now is that they are in a divergence right now. The dollar has been in a lengthy range bound consolidation from here to here. The dollar has been in a range-bound consolidation while all of the other assets, the S&P, the Dow, and the Nasdaq, have all been moving upward. They've been on a steady rally, and right now we are at all-time highs for both the Nasdaq and the S&P 500, while the US 30 or the Dow has drawn back into a equilibrium point for the range that it has been in. With that being said, if we go into the monthly time frame, we can see that the Nasdaq, the Nas 100, has been on a bullish run all of this month. Okay. Now, what's important about this is, for me at least, I think that we still have room to go as far as this bullish run is concerned. We're looking at, I'm expecting Nas to go up to around 20,070 or so, roughly in that range. Well, Ra, how did you come up with that? How did we come up with that? We took a measurement of the previous month's range. That's this range right here of this candle from the low of the green candle of the previous month, that would be May's candle, took a measurement of that candle to the top of that candle or the high of that candle, moved that to where the low of this month's candle began, and projected that into the future. So what does that look like? That looks like this. So uh, again, we're looking at a weekly trade plan. We have a target of 2,000 or 20,070. And it's a top-down analysis to determine the projected range using the previous month's range as a template or a guide for an estimate. So here we can see this is the previous month's range. Oops, this is the previous month's range that I was just talking about. Now, the measurement of that previous month's range would be what we see here highlighted in blue. That is the measurement of that previous month's range. What I generally do is I use a trend line to measure that range, as denoted here. You can see the trend line inside of that red candle. There's an up and down trend line that I use. The two circles right there, the two circles indicate the low of the May candle. The top one indicate the high of the May candle. Once I have that, I take and move that candle to the low of this month, which is I draw. I use that trend line, like this trend line that you see denoted here, that says monthly projected range, and then you can see that we went from the low of this month's candle, being the last green candle that we see denoted here, and projected into the future. Now, as we can see, this month's green candle has not reached the high of that projected range there. So that's where we're still expecting bullish movement higher. Now, you can do the same thing with weekly candles and daily candles once you have an idea of what type of bias you're looking for. So if you do the same thing with the weekly candle, when I did the same thing, and we'll get to that later on, we came up with roughly the same target. We came up with roughly the same target. Place your measuring stick or your trend line at this month's low to project this month's future high. That's what we were just doing, basically right there. And if you want these notes, uh, give me a like or a thumbs up or whatever, subscribe or shoot me a DM, and I'll send you these notes, which also have on them my expected entry points based on the analysis that we're doing right now. This candle, this last green candle here, that last green candle is actually the monthly candle, and you can see the projected range. Right now, that monthly projection is roughly 20,170 to 20,121. On a weekly basis, you can see that that is 20,072 for the target TP. Now, when you start to break this down into a weekly time frame, the next thing we're going to do is go into the weekly time frame and start to look for a entry on a weekly time frame, a logical entry on a weekly time frame. So, first thing we would do is we go look at the previous week's candle and look for the midpoint of the previous week's candle. Then we could also go into the previous, we'll look at the midpoint of the previous week's candle, and we're looking at the opening, or I'm sorry, the close of the previous week candle, the midpoint of the previous week's candle, and also we'll look 2 weeks prior for the high of the candle, not last week's candle, but the candle before that. We'll look for the high of that candle, because if we come all the way back down into that range, that would give us a balanced price range. So let's But look at what we're talking about right here. So if we go into a weekly candle, we go into a weekly candle, we can look at the midpoint from here, the midpoint of this candle. Let's go over here and find our measuring tool. Okay, that midpoint will be right there. So we can see that midpoint will be right where that arrow is in the middle. So that will be one point. That will be one point of interest for us. All right. Then we will go into a daily time frame. A daily time frame. If we go into a daily time frame, when we go into a daily time frame, we see that we have a fair value gap or a busy buy side imbalance, sell side inefficiency that runs from roughly here to here. This area here is a buy side imbalance. So we can safely look for price to, let's get that right. Boom. So we can, this arrow here is the consequent encroachment or the midway point between that on that daily fair value gap. So we can expect that we may have a run down into that daily fair value gap prior to the continuation higher. Now we're going to look for that, and we may or may not see that. So we still have to have an entry point in case that does not happen. Why wouldn't that happen? The main reason why that wouldn't happen is because we have two daily wicks here. We have two daily wicks here. That means prices come down into this area twice now. We have two daily wicks here. So what I am expecting to see at the beginning of this week, and we won't know until the market opens, is a rundown for a balancing of this price range right here. When we go into a lower time frame, we will see that price has spent a lot of time in this area between, let's say, let us say here, what is this? The opening of that is, I think that's like 19577, 19567. So 19567 is the opening of that candle. We will see when we go into a lower time frame that price has spent a lot of time in this area right here. So price may not go much further than the opening of this candle here, this daily candle. That would be Thursday's daily candle. So price may not go much further than that down. So what I'm expecting or what I would like to see that today would be price gap open, then come back down over the course of today and tomorrow or throughout Monday's price action, hopefully by 10:30. News tomorrow. Let's see here. News tomorrow is at 8:30. So we'll have 8:30 high impact news. And with that 8:30 high impact news, hopefully we'll see a spike down, and that spike down could last until that spike down. Because prices already run higher, we can see here on the 4 hour time frame, price has already run high. It has run up, swept some of this liquidity. So that would give us an excellent opportunity for price to run down lower under these two relatively equal lows into this buy side liquidity. I'm sorry, sell side liquidity into the sell side. This will be considered sell side liquidity down here. These two lows, low of 19,473, another low of 19,479 right here. So we could see price shoot down into here with the news tomorrow. Between tomorrow morning, the news is at 8:30, down into from 8:30 till the 10:30 or 11 o'clock hour. We could see price spike down into here. If so, I am looking for a entry, a long entry. The first long entry that I will be looking for is around the 19600 area, somewhere around the 19600 area. I'll be looking for a long with a stop loss at around 19, let's just say 560 or so. Give it a little bit of room. It's a high time frame because what we're looking for is we're looking for a rundown, and we also know that we can have a rundown into this sell side liquidity, and that's okay. And that's okay. We just collapse that long. If we see that price is going to run down, we'll collapse that long and allow for price to run down into this sell side liquidity as well as to the consequent encroachment or the midpoint of this 4 hour buy side inefficiency sell side buy side busy or fair value gap right here, this area right here. So I have actually marked this area out for you. The consequent encroachment of that 4 hour fair value gap is going to be where this weekly candle begins right here. And I think I actually, here we go. So that price is going to be 19,351. At 19,351, I will put in a long entry. If price should continue to move down, I will put in a long entry right there with a stop loss, with a stop loss of, let's see here, let's go back into this one here. 19,351 is going to be right around here. So that would give us a rundown. That would give us a steep rundown and a clearing of all of this liquidity. So a purging, I should say, of all of this liquidity. We've had several runs down thus far already. So it's again highly likely that we will see a rundown, and it will be abbreviated down into the midway point of this area here during news tomorrow or Monday. I think tomorrow is the 17th. We could see a rundown into the 581 area, the 19600 to 19581, with the stop loss no lower than 564, 19564. We're stop loss there in that area. Because if price should continue down, we know that it's going down to clear out, to purge this liquidity. At that point, we would move to the sideline, wait for price to come down into this area, and then give us an indication that it's getting ready to begin to rally higher. Okay. And so with that rally higher, we are looking for price to rally to the 20,065 area. That would be the top of this weekly candle, or the top of this weekly trend line. What we are looking at now is the daily time frame. This is a daily time frame. What you see here is a buy side imbalance, sell side inefficiency. And this weekly projection coincides with the monthly projection. That gives us basically a nested PD array to aim for, because it's on two time frames. It's on a weekly time frame as well as on the monthly time frame. So that being said, the expectation is that we'll have a run up to the the actual number is 20,072 or so. But I personally would collapse my trade prior to that, just in case we don't hit it. You know. The good thing about this trade is you can go in with low risk because you will have multiple opportunities to add on. So with this one trade, you could literally complete your funded challenge with one trade by simply entering this trade and holding on to the trade until roughly Thursday or so. We're looking for an entry Monday, Tuesday, and holding on to the trade until Thursday, Friday. Do that, and you can complete your challenge, your funded challenge, whether you're with top tier, FTMO, MyFX funds, funded FX, or any of the other funded funding companies. You can literally use this as a way to complete that challenge, and it will give you, if you enter with, let's say, a half a percentage stop loss and allow the trade to run and mature over the next couple of days, you could see a significant 8 to 10% gain, especially using the additional entries, which we will cover later on during the week. With that being said, have a great Father's Day. Happy Father's Day to all of the fathers out there. And happy Father's Day to all of the mothers that are playing fathers or working in the father's role. With that being said, happy Father's Day. Happy trading. Good luck. Good trading.